last Monday, we began lending in Texas, which was our sixth state. So we're in a very exciting phase of growth and innovation and impact. So, Holly.
Great. Thank you so much for having me. I'm really excited to chat with you all about this. And so we could advance the slide really quick. I'll share a little bit about Florida Policy Institute. Florida Policy Institute is 5 years old. We are part of a network that is run by the Center on Budget and Policy Priorities, if you all are familiar with that. And even if you are not in Florida, you may have one of our sister organizations out there. There's 42 of us in the network, the State Priorities Partnership Network. And so I encourage you to take a look to see if you have one of us in your state. We're all independent from each other, but we serve similar roles, which is really diving into state policies and especially budget and fiscal policy, and looking to see how that impacts especially communities, low-income communities and communities of color. Here in Florida, we especially look at economic mobility and quality of life for all Floridians. And we do this through a state budget and policy lens, and also have broached into advocacy a little bit. So we find policies that are really good and we really connect with other organizations and lift those up. And so we do public education and discussion, but we also work on coalitions and love to be on panels like this to inform about policy. And in terms of the federal policy, we do a little bit around how that impacts Florida. And so we keep abreast of things happening like the CARES Act and things that we'll talk about today. And so I definitely look at that through a lens of Florida, but it should be applicable to all of your states, and I look forward to a robust discussion. I really encourage everyone to follow us on social media. We also have a fantastic newsletter if you're interested at all. I know Andy's on it because I see he opens it and reads it, so that's wonderful. So if folks are interested in policy in Florida, and especially around social safety net, education, healthcare, we do a lot around that, criminal justice reform, different areas. Please join us on this journey. And if you could advance the slide. And most recently, we're really excited. On Monday, we released a revamped version of our roadmap to shared prosperity in Florida. And this is really a vision of all of these different policy areas that I mentioned before, and policy ideas and really principles that if politicians in the state could take up and invest in and come together with communities on, that we would be able to find that long-term shared prosperity. And I encourage everyone to also explore that area on our website, so floridapolicy.org/roadmap. I'm very proud of that and look forward to partnering with anyone on this call. Please view us as a resource. Can advance. Okay, so really quickly, I was going to go over a couple things around Corona and COVID response that we've been doing and what we've been seeing in Florida. And I know that Andy and the team at Capital Good Fund have been doing a lot of good work in Florida and have been hearing a lot of the stuff on the ground too that we have been hearing. The first graph that you see on the left is actually a graph from our partner on the Center on Budget and Policy Priorities. And this is very recent, so they just put this out. And this really drives home the idea that poverty is getting worse, and that the delay and the back and forth in DC and in Congress and in the administrative branch, executive branch, around doing another CARES Act relief or looking at more COVID relief, that delay is having real drastic consequences on our communities, and specifically communities that are already at a disadvantage or underserved. So from under 18, projected rise in poverty increasing by 19%, whites, Blacks and Latinos all having larger projected poverty increase from really from this delay in response. And I'd like everyone to kind of keep in mind that 10 million jobs right now are still That's how many jobs have been lost since the beginning of March, that we are still in a deficit of 10 million jobs. 22 million jobs were lost across the nation from March, and yes, we've recouped 12 million, but 10 million is still more than actually what we lost as a nation during the Great Recession, which was only 9 million, the total Great Recession. So we are still in a real pickle. And in terms of the solutions, we really look to Congress and the executive branch to do something, and our organization and others have been highlighting the impact of the delay locally. And we have an organization in Florida, a coalition that we run called the Safety Net Advocacy Coalition, and in partnership with a group called South Strong, that actually is a partnership with the Roosevelt Institute. They did a survey on SNAP participants in Florida. So we had a really good, robust response from SNAP participants. That's the Supplemental Nutrition Assistance Program, formerly known as food stamps. And so those folks have a very specific angle and experience during this crisis. So as you see in the middle graphic, 56% of them trouble buying enough food. That the majority of SNAP participants that we surveyed, that was a large enough sample as well to be representative. And so they're still having these issues. And this the survey was in August, and so several months into the pandemic. And we've been very active at the state level in terms of identifying policy response for the safety net. And actually, over half of our 46 policy recommendations were adopted by the state. And some of these can be just as simple as no face-to-face interviews for SNAP. Let's do recertify via phone calls, et cetera. So very specific, tangible things that that states across the nation and the U.S. government can also do in terms of their regulations. And then a couple quotes just really articulating and illustrating the impact. Just please help us, we're struggling. These were direct quotes from our survey. And that gets me to really Andy's and Capital Good Fund's experience here in Florida. And as a board member, I've been very impressed, and being in Florida, trying to spread the word about the services and the programs that you all are operating here.
Yeah, and so I think I can add a little bit of color in terms of what we're seeing in the community with our clients with respect to hardship, and tie this back to policy. So, we know that the people that we lend to, low income, predominantly of color, immigrants, women, were struggling even before the pandemic, but they've been disproportionately impacted by it. And we just crossed, I believe yesterday, 250,000 people who have tragically died of coronavirus. Hundreds of thousands more are still recovering from the long-term effects of having it. And then, as Holly mentioned, there's all these other economic impacts. And people were doing fairly well so long as the enhanced unemployment benefits were still in place. And actually, one of the ways that we know that's the case is that our portfolio performance didn't really change. Through the end of July, it was still what we normally see it, which was about 3.7% delinquency. When the enhanced unemployment expired, I believe at the end of July, within 3 weeks, we saw a spike to about 5% in delinquencies, where it's held steady, which is still very low, and it's not an issue for us from a financial perspective, but it shows the kind of hardship that people have experienced, and that's a function of congressional inaction. And this just speaks to why we wanted to have this webinar and to bring in Holly, because the crisis relief loans that we've been offering are huge impact. They're providing much needed capital that's affordable and flexible into the hands of people who are not getting it otherwise. But absent action at the state and federal level, it's insufficient. And so we want people to come away from this with an understanding of the policy, and also how to advocate for and what to advocate for. And Holly, I wonder if we could just take a moment, if you could explain to folks who might not know what the enhanced unemployment was, and kind of a little bit of context around just why did it not get renewed? What was going on there?
Sure. So enhanced unemployment, and there's several different programs from the federal government that different unemployed individuals would fall into, but the enhanced unemployment would be like get out the gate $600 weekly in addition to your state unemployment. So the state unemployment here in Florida is actually the second lowest in the nation. We have an inordinately low cap, which is at $257. But on top of that, there's the federal amount that they boosted in terms of the response for COVID. So that was a tremendous amount of money flowing into the economy. If everyone remembers, we all got $1,200 and $500 for each child in the spring, but the vast majority and much more actually from the federal government came through this extended unemployment, and really had seen lifting people out of poverty, doing extremely well. It was very well targeted. And $600 is a lot, and it's really good for this kind of targeted response to an extreme economic crisis. And I'd like to point out as well, in a state like Florida, and there was a few other states too that saw issues, but our system was very slow and really unable to respond to the spike of 2 million claims. Our online system was really kind of designed to give as little as possible in terms of response. We also have the lowest take-up rate in the nation, which is the percent of people eligible for unemployment who actually then receive it. And it's because there's all of these barriers put in the way, and one of which is our system here, about 15%. So we have a 15% take-up rate here in Florida, which that was before the Corona recession. And so now it's just created this huge problem over the last 8 months. The last 2 months or so has seen a little bit better just because of the time it took over those first few months to respond. And so I would say that the amount, so $600 being a single amount to everyone, is actually much easier to do because it's direct. It's much easier for systems to respond to. So if we were to do an amount, which I've heard differing between different groups depending on your income, which to a lot of people would make sense, or a percentage of your income, that just would take much longer for systems in the state to get that money out. So it's kind of like a trade-off, right? If you have a single amount that's high enough that that would be a boost to everyone, and by and large that was the biggest buoy for the economies writ large. And here in Florida, being a service-based economy, and 9 million out of those 10 million jobs nationally that are still lost were in the service industry. And so you see our hospitality here still being hit very hard. But that would be a tremendous boon, and parties are talking about it now between House leadership and the Senate leadership and the administration. And that's really been a sticking point as to what number should that be. But again, I'd like people to remember that it's sort of easier for states. It is easier for states to get it out if it's all one number, if it's uniform.
Yeah, and one of the things that we were surprised by was that Florida, as you mentioned, Holly, kind of intentionally had developed a system to make it hard to get unemployment. And almost all of our initial crisis relief loan volume was in Florida, because while people were waiting to get this money that they were eligible for, they needed help. And so that initial delay created a lot of unnecessary hardship. And even other states had difficulty responding to it, but in Florida particularly seemed to struggle.
Right.
All right, why don't we go to the next slide, and we can talk a little bit about the HEROES Act. I think this was a duplicate, sorry. So just to tee this up a little bit, folks who follow this may be aware that there has been for a while discussion about, all right, the CARES Act was a long time ago, the pandemic has not abated, it's gotten worse. So what is going to be the next round of stimulus? And so if Holly, you could walk us through what the HEROES Act was and where the status of that is, and then we can dive into, all right, what should we expect with a Biden administration?
Well, and I'd like to add some context to this, which is that really, as bad as things are right now, they would really be far worse without that initial CARES Act, that added help for families that the federal government approved earlier in the pandemic. And so, but really, because that has expired, and not only the extended unemployment, but a lot of these other pieces are expiring, inclusive of a lot of the monies given to local state governments and education that they all have to spend by the end of the year. So in January, we're going to see this sort of cliff, not only for personal pocketbooks, but for all of these different areas of the economy that the CARES Act invested in. And on the House side of the equation, there was an initial bill in the midsummer that was introduced. That was a $3.5 trillion bill, and then they actually pared it down and passed it, and that's called the HEROES Act out of the House. And here's some critical things in there, inclusive of another stimulus check to everyone, another round of that, and another going ahead and expanding the expanded unemployment insurance by $600, and also expanding the inclusion of gig workers, which has been another sort of unsung huge part of the CARES Act that really lifted so many people. And that also expires at the end of December. So that's something to keep in mind as negotiations wear on. The HEROES Act includes additional flexible state and local aid. And this is something that our organization has been a huge proponent of. And that is because just like in the Great Recession, where you saw unemployment spike and so like housing foreclosure spike, and then overall trickling into different parts of the economy would take a little bit longer, and then that impacts state and local budgets, which then create cuts. So there's always a lag between economic strife and then your local and state budgets. But those are, teacher jobs. That means teacher layoffs. That means firefighter layoffs. That means important infrastructure that was meant to be built can't be, and those are always jobs. And it really doesn't matter what state you're looking at either. There's been back and forth as to what states need it, what states are going to use it for, but every state in the nation has a projected shortfall. So that's inclusive of Florida, which is $5 billion over the next 2 years. And so without this additional state and local aid from another CARES Act, or from either the HEROES Act or another COVID response, these local jobs and infrastructure, all of this, the economy that is dependent on state and local jobs state and local funding will be really impacted. So that's a crisis that is a slow moving crisis, completely preventable, but that really extended the life of the Great Recession, was this huge cuts state and local, because the national infusion wasn't actually enough then. Notably, they did it at that point, right? And after the Great Recession, there was actually monies brought down to state and local budgets, but it wasn't enough to completely stave off some of those effects. Right now, there is none. Right now, there's no flexible state and local aid in order to prevent dramatic cuts. There is lots of aid for corona-related expenditures, like tests and response, and a lot of the monies that have been spent, a lot of it going directly to people, especially that local aid, the counties out there. There's been some interesting studies about how the counties have been using that local aid to help with rent assistance and housing assistance. And those are all important things. But keep in mind that without state and local aid, there will be layoffs of these municipal and education and local jobs, and that's going to be very painful. So that needs to be included.
Yeah. And this is a key point, because I think a lot of people don't realize that the federal government can have a budget deficit, but state and local governments have to balance their budget every year. So that's going to be a huge issue. And one of the things that we've seen, for instance, in Rhode Island, is that even the money that was allocated to the state, which again, they cannot use to plug their existing budget gaps, and that's an issue that's Holly's been elucidating, they're having trouble getting the money out the door. A small percentage of the allocated money to Rhode Island has gotten into people's hands because there's a lot of hoops to jump through. And that's been one of the reasons why our product has been so important, is because we can get the funds to people more quickly. And I don't know, Holly, I mean, is that something that you think like you guys are looking at and that people should be advocating for, is making it easier for states to get money into people's hands in subsequent funding rounds?
Well, that's why for sure I include the word flexible there. The current monies that the states have and localities have it's been very politicized. So the Treasury guidance is very stringent. There's a lot of concern. So a lot of those hoops, I'm sure, comes through concern from the locals that the U.S. Treasury is going to come down on them hard and ask for money back, and which they've indicated they might, that they would claw stuff back if they don't use it exactly right. And the guidance has shifted over time. So there's a lot of disconcerting messages and conflicting messages from federal, and definitely conflicting, because the Treasury over time has shifted completely. Now, next year, who knows? But again, all of this money in the CARES Act, or there's a small amounts in different pots. It's a little bit further out, but the vast majority of it by the December 30th. Why not 31st? I don't know. December 30th, they have to use. And so, yeah, there's some out there, if they're not using it. I mean, can you imagine them having to give that back and not being able to use it because of bureaucracy? Or, to be honest, Andy, like as you mentioned, and you can speak a little bit more to this, but they're just not really set up to do a lot of what this money is for, right? That they've never had to do these humongous rent assistance, and if it's just trying to figure out who is qualified and preventing the fraud that we've seen in some of the unemployment issues and some of the, like the PPP loan component to that. But basically asking some of these groups to be financial institutions, basically, and when they're not, is very difficult. And we see that here in the state, where our Department of Education has a lot of monies for our childcare, right? That the CARES Act had a lot of money for childcare, which again, that's another component that we advocate for within the HEROES Act is $50 billion for childcare overall, because they are hurting, the industry's hurting, but the government isn't. Some of those governments and local governments aren't set up like that. So for sure. Additionally, SNAP increased housing aid, that's that rent assistance and housing aid, and also increasing the EITC, the earned income tax credit, and making the child tax credit fully refundable, increasing the eligibility for EITC so that younger workers, and especially workers that don't have a child that they can claim on their taxes, that they can expand it for them, because currently the only folks in the nation that are taxed into poverty are people without dependents that they can put on their taxes, because the EITC is really, really chintzy for folks that don't have kids, or kids that they can, or a lot of them do have kids, but they just can't claim them on their tax credit. So expanding some really easy federal boost to the economy would be, especially because January, February, tax season's right around the corner. So it's very timely for this as well. So if they were to expand those tax credits, and using the tax code for this would be very smart as well.
All right.
Question for either one of you. Is there an equal balance for the CARES Act or the HEROES Act that goes to individuals versus industry or small businesses?
I'll answer it, and I'm sure Andy can respond too. You know, there needs to be a balance for specific industry. I think that there were a lot of lessons learned from the first one. So it's not necessarily industry or small business, it's more which industries and which small businesses, because you saw with the PPP loans that the very savvy businesses that really weren't going to be impacted by the crisis didn't need it, but would be, you know, some of them would feel they would be stupid if they didn't take basically free money, you know. And so you saw a huge amount of the PPP loans. Not that I mean, it was a very smart, good thing. I think that the PPP loans, they'll probably do another round of them. If there is corona relief, that's part of this conversation, are these paycheck protection, but it should be for industries that are impacted. You have service industry, like I said, 9 out of 10 jobs that are still lost are in the service industry. And so basically targeting to the people that need it most, and to the small businesses that need it most, and also especially small businesses that don't have capacity to immediately walk through the door to do these programs, to participate. And so making the barriers less for for the groups that need it the most, and definitely discouraging individuals or or groups that don't need it. You know, this recession is what people call a K-shaped recession, which really just means it's a recession for people who were doing poorly or who had lower incomes and were struggling before this crisis, and unfortunately it's been hitting them most, whereas interest rates being zero and other benefits to different industries has made the wealthier better off, and they're okay. So making it targeted is key, and that includes small businesses who maybe were left out of the PPP phases or didn't have the capacity, or you know, someone on their staff that was basically attuned to that system, or have a bank that was big enough to say, yes, we can help you with this. So I think it's more the targeting than the individuals versus businesses.
Yeah, and I think from our vantage point, the two are linked in the sense that most of the economy is driven by small businesses who have the least liquidity and ability to withstand this crisis. And a lot of those are in the service economy, restaurants and the like. And so for them to survive this crisis and for their workers to survive the crisis, they both need help. What's happening right now is that workers are sort of being forced to decide to go back to work and put their health at risk and make the pandemic get worse, or stay home and get no support and risk eviction and hunger and all the things that we're trying to forestall with our loans. And at the same time, businesses are sort of in this place of not wanting to stay open because the customers might not be there, or they can't afford to make their improve ventilation and make changes that will make it safer for people to work and frequent the business. And then if they close or stay in their current situation, they're going to go out of business. So that's why I think, to Holly's point, yeah, another round of payroll protection program lending that's targeted with additional support for individuals is going to be essential. If you do one without the other, you're not going to prevent the long-term economic damage that's going to happen because of this pandemic.
Thank you. We do have a question as well. What is the increase for the EITC and CTC?
You know, in the HEROES Act, I have to get back to you on that, to be honest, because I know that that's there's different increases for different individuals, or put that together. It was basically an increase overall for the top limit for the amount that you would receive for it, but then also expanding the eligibility. Right now you have to be 24, and there's no reason why. It's just 24, which doesn't make any sense. And so ratcheting that down, and then also increasing the amount, because right now it tops out at $400 for someone who cannot claim a qualifying dependent. But if you can, or if you have one or two dependents, it'll top out at $5,000–6,000 for your family. So it's extremely disparate, which is great for those families for the needs. But it's long been the case that the EITC doesn't help as much as it could for individual workers that don't have someone they can claim on their taxes as dependents. And so it addresses those. The child tax credit, I do know this offhand, it's a full what's called refundability for that, meaning that if you don't owe taxes, that it would pay you that total amount. The Tax Cut and Jobs Act increased the child tax credit from $1,000 to $2,000, and with $1,400 of that being refundable. And but that's only after you've made $3,000. So low-income individuals, it is biased against folks that don't make as much money, just because that first $3,000 doesn't count, and it's not really for a good reason. So it would be a full refundability, which would put more money into the pockets of lower income families, and make that a much better and more equitable tax.
And for those who don't know, Holly, can you tell us what those two terms are? I think you said them as you were speaking, but do you mind saying what those two terms are? The EITC?
Sure. Yeah, the Earned Income Tax Credit, which is a credit for anyone with earned income, and especially just a random aside on that is tipped individuals really need to think through about the ability to tap into this. And so when you think about the service industry and tips, that actually can be a boon to families if you claim that. So it's an encouraging folks to claim at least some of this, some of their earned income for that. So the earned income tax credit is a very valuable tool. It is actually the federal program that lifts more people out of poverty than any, even more than SNAP and others. And it's through the tax code, which is a really great direct targeted way, right? It's how we get money into the bank accounts of people all across the nation. And so, and it has the lowest barriers, it's the easiest thing to do, and it has the least stigma, right? So earned income tax credits it sounds great, it's a boon to everybody. And so I think the tax system, if we can continue to utilize that, but really around the child tax credit being in an additional program, sorry about that, child tax credit, the CTC child tax credit is an additional program that supports families. But making that what we call fully refundable, so that even the first dollar that you make counts towards that child tax credit, is much more fair, and also addresses the need in a pandemic. I would say, though, that the tax credits are tough in a unemployment in a jobs crisis, because if you don't make as much, then that could be critical as well. Or if you don't have a job, then the tax code isn't as direct of a system to help boost the economy. But there will be a lot of people out there who will qualify for the EITC for the first time. So maybe you've lost a job and your family income has fallen into a bracket that you never have been in before, or you didn't realize families up to about $40,000 individual, and married about $55,000. But that's a very powerful tool, and that's why there's been lots of back and forth about how much we should increase those two taxes. And there's other tax levers that could be pulled as well that are being discussed.
Do you think that there's an opportunity, Holly, as these things are put into place, to just make them permanent, like to make the child tax credit permanently fully fundable? Definitely, and that's where a lot of advocates have been pushing. You know, there's a phrase saying that, you know, never let a good crisis go to waste, and there's a lot of advocates that see this as an opportunity to point to the value of permanently of creating these tools. Whether that's the earned income tax credit, expanding that to the single workers and lowering the age, that's been really important. And also the refundability of the child tax credits. Both of those, now the earned income tax credit expansion in 2015 actually became permanent. You know, we expanded the EITC after the Great Recession, right? After the Great Recession, that was expanded. We said this is an easy tool to get money into the pockets of people. And then that was set to expire in 2015 because, oh, the recession's over, supposedly. But Congress came together and they said, no, this was a value that we see the value permanently, and passed that. So in 2015, we were tax advocates for, especially for working tax credits or tax credits for working families, came together to support that. So I could definitely see basically pointing to the proof that these work and that it's a valuable, and the overhead is low, right? Getting the money into people's pockets, turns out that's the most effective thing, right? Giving people money. And that really, when you look at our country overall, how we shifted from what you would call, quote, welfare from the 90s, the welfare reform, really shifting the temporary, that program into the tax system, giving people money through the tax system instead, which there's differing ideas as to the value of that, but that's really where a bulk of our economic response to working families comes, is through the tax credit. So I could definitely see that. Another permanence idea that is very good, that I think we should be supportive as a country, is the idea that when certain economic benchmarks are met, when there's a crisis, that some of these factors would come into play automatically, right? Like
You see that already with unemployment, that sometimes in different states, you see unemployment increase the amount that you could get depending on the unemployment rate. And so you could do that for all of these items. You could make some of these things automatic so that in a crisis, we don't have to wait like we are right now, and you don't have to wait on Congress getting its act together and perpetual gridlock. That if they were to say, you know what, this has been really, really difficult to do all of this politicking back and forth, let's just increase, or let's just instill triggers so that when and if this happens again, that we will be prepared and you have that almost immediate response.
Great. All right, let's go to the next slide, Aisha. All right, so obviously we have a new administration coming into power January 20th at noon. And, one of the things that has been really interesting for me is that we hear generally in the news about the big things that the Trump administration has done, big action steps that they've taken, the immigrant child separations or foreign policy, big tax cut. But a lot of the things that they've done that have had real day-to-day impact on people's lives are more wonky, more jargony, more nuanced, and often done through executive action. And so I think that tells us that there's a lot that the Biden administration can do to reverse that, absent congressional action. And for example, one of the things that we've been looking at is payday loan reform. So under the Obama administration, the Consumer Financial Protection Bureau had proposed some regulations that would rein in some practices of the payday industry. For instance, they were going to require an ability to pay test for being able, before you do a payday loan. And the current administration rescinded that rule, and so did not put it into place. And payday lending has thrived, and as more people have found themselves in economic hardship, more people are turning to payday lending. So we're certainly going to keep an eye on what the CFPB under a Biden administration will do to hopefully revive that and to take additional action to protect consumers. And I know that, Holly, for instance, we were talking before this about the Trump administration had been proposing some potential rules around work requirements to get benefits. And if you could just speak a little bit to that, and of course, we expect that that'll be rescinded as well.
Sure. So there's administratively proposed rules, and then there's also rules that states can propose that the administration would then put their stamp of approval on, whether that's an executive action or it's typically agencies. So different things that we work on at the state level have the federal, there's an impact at the federal level, because if the federal administration accepts state rules or denies state rules, that would really impact how our state programs are run. And there's many of these programs that are run at the state level, but it's really a partnership. So one of those being Medicaid, for example. So Medicaid, the Medicaid program, you also have the Temporary Assistance for Needy Families program. You have the SNAP. So SNAP, TANF, and Medicaid are all programs that certain state legislatures and governors have proposed to the Trump administration to add work requirements on. And some of them, for example, Medicaid and SNAP, some of those states have then had those rules accepted, but then the courts have overturned them. And so there's been back and forth on that. And important to know about the idea of work requirements, and I'd say it's really quotes, and I don't like to say they're really red tape requirements. So those are red tape requirements because you have to go online and prove that you've been doing certain things. And it's really similar to our state's approach to unemployment, where if you make someone go through enough hoops, then you assume that people have lives and kids to raise and things to do, and that they're not going to be able to get through all of these hoops when some of them have to do with online abilities, etc. So the work requirement issue was something that we've been working on here in Florida, and responding to different bills that have been introduced and kind of educating the legislature as to the impact of those. And there's a disparate impact on rural communities that have less access to the internet, for example, or have transportation issues. And so we've been able to reduce the traction here at the state level for these red tape requirements. But now that the administration will be shifting to one that is much less friendly to these ideas, advocates at the state level can focus on other things, because even if Florida were to say that they want to do something around this, or a work requirement, let's say for Medicaid, which in our state doesn't make any sense because we didn't expand Medicaid, but that's another story. They still can propose these things. The new administration would not accept these, right? So there's a lot of state level advocates that can now pursue maybe more proactive ideas and policies and or other just state issues, because of the Biden administration wouldn't accept something like that. There's other areas too. Block granting Medicaid has popped up a lot, and that's not something that the Biden administration would go for. That would severely restrict the amount of monies flowing to especially growing states like Florida over time. So it'd be silly to do it, but there's always been proponents of that. There's lots of other things. The immigration rules are huge too, and there are some things that are just going to be almost immediately overturned and or not pursued, inclusive of the public charge rule, which highly impacted immigrant families in pursuing different programs that they were completely entitled to, and that very much harmed and impacted children receiving SNAP, and those families who, even children that are citizens, not that it matters because hunger doesn't know citizenship, but those rules will certainly overturn too. So a lot of these advocates can now pivot to other things, inclusive of looking to the Congress and laser focus on COVID relief, rather than some of these terrible rules that continue to come out, or approving state rules too. So that's what we've been focusing on, and so now we can use some of that bandwidth on other more proactive visions.
Yeah, and I think this point of playing defense
Mhm.
versus being proactive, we think of it very similarly, because a lot of the lending that we've been doing over the last couple of years has been responding to inequities. I mean, for instance, the immigrant community being such a big part of who we serve, and also our immigration loans specifically, it's been deeply impacted by attempts of the current administration to make it harder for people to apply for citizenship or a green card. Asylum is basically no longer a thing. And so under a new administration, it's not that people will no longer need immigration loans. To the contrary, they probably will need more of them, because more people will be eligible to apply for measures. There will be asylum again. The administrative process will be made quicker. If you go and talk to an immigration attorney, and we have one on our board, Alina, and we know a lot of them, you'll quickly be blown away by how many little roadblocks the federal government has put into the process of becoming citizenship or green card. There's of course the question of DACA, which Biden has said he will renew on day one through executive action. So these are all things that mean that we can take advantage of more friendly posture towards the people that we serve, rather than trying, for a while we were focusing on doing loans for bonds, so people who are detained by ICE could get out. We expect that crisis will abate. Similarly, on the energy efficiency side, where we have our double green loan, the Biden administration has said they'll make climate change a huge priority. And we think that's going to open up a lot of opportunities for us to take advantage of new tax credits and cash incentives and rebates for people to do that work. Mm-hmm. So we're thinking very similarly, like moving from a defensive posture to working proactively to address injustices that we're trying to address as an organization. All right. So before we dive into how to advocate for public policy, I certainly want to encourage people to ask questions, but you touched on this a little bit, Holly, but I'd love to hear, other than kind of the HEROES Act or whatever that new coronavirus stimulus will be, what are some other things that you're going to be looking for from the Biden administration?
I guess it is going to be interesting to have to pivot very completely from a defense to more proactive. But I think that a Biden administration will have a little bit, longer view. I think being able to partner on implementation around some Affordable Care Act tweaks and things like this over the last few. We work a lot on Affordable Care Act, Medicaid, healthcare policy. And a lot of people don't know that Florida, we actually have more people on the federal marketplace, the Obamacare marketplace, the federal marketplace. We have more people, 2 million on it than any states. And that's partially because we didn't expand Medicaid, and it's also because we don't have our own state marketplace. But in Miami-Dade County, there's 500,000 people on the federal Obamacare marketplace, half a million people in Miami-Dade County. And so there's a lot of issues that have kind of sprung up from that the last administration didn't seek to make fixes, kind of created a lot of these barriers that drove some of these problems, being around premiums and other things that kind of made the marketplace less appealing maybe, and so drove a lot of these problems. So even to make some tweaks and to help support that program, there's a huge amount of funding that the Trump administration withdrew from insurance companies that made it less palatable to help people in the marketplace to help drive down those costs. So I'm assuming that there's going to be a lot more of that, just looking at policy, going back to that, the Care Act, the Affordable Care Act, and looking at kind of tweaking it, which absolutely our health system in America needs more than tweaks, but even kind of propping that up and going back to that policy and looking at it from a positive standpoint and kind of creating, using it as a tool to jump off from rather than kind of sabotaging that act will be very beneficial, especially in a state like Florida where 10% of our folks are being assisted from the Obamacare, the federal marketplace. So that's just one area that I think that we look forward to seeing how that will impact the communities we care about.
All right, well, have questions come in, please. But I think we can talk about how to advocate for policy. I think, so first of all, I want to note both of us, Florida Policy Institute and Capital Good Fund, are 501c3s. And so, we're nonpartisan, and we're, we in particular as a lender are limited in how much advocacy we do. So we don't take a partisan stance. But personally, it wasn't until the last 4 years that I really started to learn the value and importance of contacting my members of Congress. I had never made a call to my US rep or my state rep or US senator, et cetera. But Holly, you can speak to this. It really matters. And certain groups like the NRA are extraordinarily successful at mobilizing their membership to barrage their members of Congress with their viewpoint, and it works. And so I think those of us who are working to advocate for issues that impact the lives of marginalized communities need to keep that in mind, because one of the things about being a marginalized community is that your voice doesn't carry as much weight in Congress. And some of us that have a little more privilege can be using that to make sure that our elected officials hear from us about things like the importance of passing, the HEROES Act. So Holly, maybe you could speak a little bit more about how one goes about advocating for public policy.
Sure. So I'll be brief, and I'm glad that you have this little picture up. This is from our brand new area of our website about our roadmap to shared prosperity. And on that homepage, you go to floridapolicy.org/roadmap, and you see the button that says download advocacy toolkit, because I wrote that from my brain of my experience around, I used to work for congressmen, and I did different things with legislative aid, but I also oversaw all of this stuff about, constituent letters, et cetera, and understand that impact. Now, I mean, each member of Congress kind of views those things differently, but in general, some of the tidbits that I put in there are kind of directly from that experience that I have. And So I would say in general, the biggest things to remember are that individual stories matter, that definitely your member of Congress, your senators, I'd say over the past 5 years, it's really difficult that maybe some of this has lessened a little, like the partisanship has been driving a lot of action compared to local voices, but it still matters a lot. And your local details and your individual stories matter. If you can, being able to edit, like even a letter. So if you're advocating on an issue, like on our website, we have a few Action Network pages that if you like an issue that we've been discussing, for example, we talk a lot about occupational licensing reform, for example. That's a big thing for us in the state of Florida in this upcoming year for returning citizens. And on that webpage, we have the Action Network form. So you can go, you put your number in and it'll send a form letter, but we also encourage you to edit that, because to an elected official, and an individual story is more impactful, especially if, to make sure to let them know that you are a constituent and your local, about your local stories as well. I think that organizing more than a handful of folks, like if you have a purposeful organization, even if it's some volunteer piece, if you're a member of a board, I think all of these things come together to add credence to being an advocate and utilizing their time at home. So knowing when Congress is at home or your local legislature is at home, that's always time when they have a little bit more breathing room to hear from local constituents, and call up their staff. You know, that's what they're there for. They're public servants, and I know it's difficult. It's divisive time. It's very difficult time now to be a public servant in this space, but you know, there are employees. They are our employees. So their staff, especially on the issue that you care about, is there, and just ask who covers that issue, and if you want to talk to them and have questions, that is a really effective way to go about. But more tidbits and tips on our advocacy toolkit.
Yeah, and I would say if there's one action step for everyone to take away from this, it's to go to that link at usa.gov. You can look up your local elected officials and call them. You know, obviously pick an issue that you want to advocate for, but call them. It's really easy to do. You just tell them your name, where you live, and you want to focus on one issue that you're calling about, and maybe it's the HEROES Act, and you say, I'm calling to encourage you to support the HEROES Act, or whatever it may be, but do it, and it sort of becomes addictive, and it really does matter. And then there are other tools. So there's this tool I put here called resist.bot, which makes it really easy to send faxes. All you do is through a text message, or even like Messenger or Twitter even, but it sends it out as a fax to your elected officials. And generally speaking, the order of operations here is most important is in-person visits, which are not happening right now, to your elected officials, and then phone, fax, letter, and then email and petition. You can do it, but they're going to pay more attention to things that are more to the left of that list. And then of course, like we know, we all should vote. So make sure you're registered to vote and periodically double checking. But we just did that, and now we got to do the advocacy piece and make sure we keep the pedal to the metal, and we're all more engaged, I think, politically right now. We should continue to do that. All right,
I have to say, there was a day when I plugged in the fax machine because I realized it was unplugged, and literally hundreds of things were printed out. So I'm assuming that was someone like you, Andy, who sent us a bunch of resist.bot stuff, right? Yeah.
All right, I guess you can put the last slide just with our contact information and how to support the work of Capital Good Fund and Florida Policy. Is there any last quick question?
We've got about.
Please do follow. Go ahead.
We've got about less than a minute left. So as people are advocating, and as we wait for the Biden administration to take over in January, what are some things that we should be asking our local governments to do right now?
Well, I think understanding if your local government receives considerable monies from the CARES Act and how they spent that, that is completely, that they're totally accountable to their local constituents, and you see some using it better and more efficiently than others, and so that is definitely a local thing to ask your mayor or your commissioners, and to keep an eye on that. Because it's definitely a boon to local groups, but they must be using that for some rent assistance or corona response. So that's within the Treasury guidance. So if you are paying attention to your county commission or localities, the state funding flowing through there too, keep an eye on that and know that it needs to be in responsive to local needs. And so in Florida, we see varying different programs in housing or small business, but keeping them accountable for those considerable federal monies that have flown through them as well.
And I would just say simply, if there's not a